Recently, former President Donald Trump has been highlighting two key economic indicators: falling oil prices and borrowing costs. Trump's message has been clear: these drops are a sign of economic strength. But while Trump praises the situation, a growing number of experts are warning that these declines could actually signal more serious problems on the horizon. Falling oil prices and borrowing costs might sound like positive developments at first. Lower oil prices generally mean cheaper gas, which could boost consumer spending and keep inflation in check. Similarly, lower borrowing costs suggest that interest rates are falling, which could encourage both consumers and businesses to borrow more money for investment and spending. However, many economists are sounding the alarm about these trends. While they may seem like good news in the short term, they could be indicators of underlying problems in the economy. According to experts, these decreases could be signs of a weakening economy rather than a sign of strength. Let's first look at falling oil prices. Over the past year, global oil prices have been on a downward trend. While this has led to lower prices at the pump for consumers, it also reflects a global slowdown in demand for oil. When economies are thriving, demand for oil typically rises as businesses and consumers use more energy. But when demand drops, it's often a sign that economic activity is slowing down. In particular, many countries are seeing reduced industrial production and weaker consumer spending. This has led to less demand for oil, which is one of the world's most widely traded commodities. So, while falling oil prices might be good for consumers in the short run, they could be signaling a global economic slowdown, which is a major concern for experts. Next, let's talk about falling borrowing costs. Lower borrowing costs generally come as a result of interest rate cuts by central banks, such as the Federal Reserve. While lower interest rates can stimulate the economy by making it easier for individuals and businesses to borrow money, they can also reflect concerns about economic growth. Central banks often cut interest rates to try and boost the economy during times of uncertainty or slowdown. The fact that borrowing costs are declining may signal that the economy is struggling. Central banks might be trying to stimulate growth by encouraging borrowing, but it could also mean they're concerned about a downturn. If borrowing becomes too cheap, it can also lead to risky investments and excessive debt, which can set the stage for future financial instability. Experts have pointed out that these trends are occurring against the backdrop of a more volatile global economy. With ongoing challenges like trade disputes, geopolitical tensions, and the lingering effects of the pandemic, these warning signs are not being taken lightly. The economy may not be as robust as some would like to believe, and these drops in oil prices and borrowing costs might be indicators of deeper trouble. Trump's praise of these developments may be rooted in his focus on immediate political gains, like lower gas prices, which are always popular with voters. However, ignoring the underlying causes of these trends could be a dangerous move in the long term. If the economy is slowing down, the administration's optimism may be misplaced. In conclusion, while falling oil prices and borrowing costs might seem like good news at first, many experts believe these are warning signs of a cooling economy. Instead of celebrating these trends, it's important to take a closer look at the broader economic picture and what these declines might really mean. As global and domestic factors continue to shift, policymakers need to be cautious about jumping to conclusions, and they need to be prepared for potential economic challenges ahead.